Based on the provided data, the trend for Bitcoin appears to be bearish. Historical prices show a consistent downward movement, with the forecast data further reinforcing this trend. The RSI, which is currently at $24.70, is significantly oversold, suggesting a potential for a short-term bounce. However, the overall bearish sentiment, coupled with the price action below the support level of $80,300, indicates a higher probability of continued downward movement. Therefore, a short position strategy is recommended. Enter a short position at the current market price of $84,300. Set a stop-loss order at $88,600, which is the highest recent high point. The target price is $75,900, which is the forecasted low for the upcoming week. This strategy capitalizes on the anticipated bearish trend while mitigating potential losses by setting a stop-loss order. It's important to note that this is just a suggestion based on the available data, and market conditions can change rapidly. Based on the provided data, Bitcoin Cash appears to be in a downtrend. The historical price action shows a consistent decline, with the price breaking below the support level of $316. The forecast data further reinforces this bearish outlook, predicting a continued decline in price throughout the next week. Considering these factors, a short position is recommended. A suitable entry price would be around $294, the current support level. The stop-loss order should be placed at $302, slightly above the entry price, to limit potential losses. The target price for this trade is $259, based on the forecast data. This strategy aims to capitalize on the ongoing downtrend and generate profits from the anticipated price decline. In addition to the trend-based strategy, we can incorporate technical indicators for further confirmation. The RSI is currently hovering around $33, indicating that the asset is not oversold. However, the price action suggests that the downtrend may continue, leading to a potential drop in the RSI below $20, signaling an oversold condition. Bollinger Bands are also narrowing, which often precedes a breakout in either direction. Given the prevailing bearish trend, a breakout below the lower Bollinger Band could further confirm the short position. Combining the trend analysis with the RSI and Bollinger Bands provides a more comprehensive and robust trading strategy. Based on the provided data, Stacks appears to be in a downtrend. The historical price data shows a consistent decline, supported by the forecast data predicting further price drops. The RSI, hovering below $40, indicates oversold conditions, suggesting a potential for a short-term bounce. However, the Bollinger Bands show price action consistently below the middle band, reinforcing the downtrend signal. Therefore, a cautious short position is recommended. Enter a short position at the opening price on March 1, $2,025. Set a stop-loss order at $0.798, slightly above the recent support level and the forecast high for March 1. The target price is set at $0.677, based on the forecast low for March 5. This strategy utilizes the downtrend, oversold conditions, and price action below the Bollinger Bands to identify a potential short opportunity. Based on the historical and forecast data, Ethereum shows a downtrend. The price has been declining consistently over the past 2 weeks, and the forecast indicates further decline in the coming week. The support price at $2,220 suggests a potential floor for the price, while the resistance price at $2,370 acts as a barrier to upward movement. Therefore, a short position is recommended. Enter a short position at the market price when the price reaches $2,370. Set a stop-loss order at $2,430 to limit potential losses. The target price is $2,220, which represents the support level and a potential point of significant price reversal. This strategy utilizes the downtrend, resistance level, and support level to maximize potential profits while minimizing risk. Based on the provided data, XRP appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast predicts further declines in the coming week. The RSI is also below $50, indicating bearish sentiment. A good entry point for a short position could be around $2.30, with a stop loss placed at $2.38 to limit potential losses. The target price could be set at $2, which represents a significant downside move. However, it's important to consider the Bollinger Bands. The price has been trading near the lower band, suggesting potential for a bounce. Therefore, a more cautious approach could involve waiting for a price break below the lower band before entering a short position. This would provide a stronger confirmation of the downtrend and potentially reduce the risk of a false signal. Based on the provided data, Binance Coin appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, with a significant drop observed in the last few days. The forecast data also suggests a continuation of this downtrend in the coming week. Considering these factors, a bearish strategy is recommended. A suitable entry point for a short position would be around $615, near the recent support level. The stop-loss order should be placed above the recent high of $668 to limit potential losses. The target price could be set at $581, based on the forecast data and the downtrend. This strategy utilizes both the historical price action and the future price predictions to identify a potential opportunity for profit. Based on the provided data, Stellar appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests this trend will continue. The RSI is currently below $50, indicating bearish momentum, and the price is trading below the $20 day moving average. A potential entry point could be around $0.295, the predicted price for February 27th. The stop loss should be placed below the recent support level at 22 cents, to limit potential losses. A target price could be set at 25 cents, which represents a potential 15% upside from the entry price. This strategy utilizes the predicted price movement and support level to identify a potential entry point. Based on the provided data, Toncoin appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price falling below key support levels. The forecast data also suggests a continued downward trajectory for the coming week. Considering these factors, a bearish strategy is recommended. A suitable entry point would be at the current market price of approximately $3.50. The stop-loss order should be placed above the recent swing high at $3.54 to limit potential losses. The target price can be set at the next significant support level, which is around $3.39. This strategy utilizes the current downtrend and anticipated price decline to generate potential profits. Based on the provided historical and forecast data, Cardano appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, with the forecast suggesting further downward movement in the coming week. The RSI indicator is below $50, indicating bearish sentiment. The Bollinger Bands are narrowing, suggesting a potential for a break in either direction. A potential strategy could involve shorting Cardano at the market price, with a stop-loss placed above the recent high of $0.809. The target price could be set at the next support level, which is around $0.647 based on the historical data. This strategy utilizes the downtrend, the bearish RSI, and the potential for a break below the current support level. However, it is important to note that this is just one possible strategy, and traders should always conduct their own research and risk management before making any investment decisions. Based on the provided historical and forecast data, Litecoin appears to be in a sideways trend with a slight upward bias. While the price fluctuates around the support level of $101 and resistance level of $135, the forecast suggests a potential dip in the coming week. Considering the RSI, which is currently around $50, neither overbought nor oversold conditions are present. However, a potential entry point could be around $120, based on the forecast and the recent price action. A stop-loss order should be placed at $115 to minimize potential losses. The target price could be set at $128, aiming for a profit of approximately 7%. This strategy combines the potential for upward price movement with risk management through the stop-loss order. Based on the provided historical and forecast data, Doge-Coin appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast predicts further downward movement. The support price of $2.84 is acting as a temporary floor, but the resistance price of $3.42 is proving difficult to overcome. Considering these factors, a bearish strategy is recommended. A short position could be initiated when the price reaches the resistance level of $3.42. The stop-loss order should be placed at $3.55 above the recent swing high. The target price could be set at $2.54 based on the forecast data and the downtrend. This strategy utilizes the identified trend and price levels to capitalize on potential further price decline. Based on the provided data, Aptos appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data suggests further downward movement. The RSI, while showing some fluctuation, remains below $50, indicating bearish sentiment. The Bollinger Bands are also contracting, suggesting a potential for a breakout to the downside. Therefore, a short position strategy is recommended. Enter a short position at the current market price, which is $5.92. Set a stop-loss order at $5.87, the nearest support level, to limit potential losses. The target price for this trade is $5.38, based on the forecast data and the downtrend. This strategy aims to capitalize on the potential for further price decline in Aptos. Based on the historical and forecast data, SE appears to be in a sideways trend with potential for upward movement. The forecast prices suggest a slight increase over the next week, while the support and resistance levels indicate a range-bound market. The RSI indicator is currently hovering around neutral levels, suggesting a lack of strong momentum in either direction. The Bollinger Bands are relatively tight, indicating low volatility. A potential strategy could involve a long position initiated at the entry price of $0.257, the lowest forecast price. A stop-loss order should be placed at $0.251, below the recent lows and the lower Bollinger Band. The target price could be set at $0.279, the highest recent price and the upper Bollinger Band. This strategy capitalizes on the potential upward movement while managing risk by placing a stop-loss order below support. Based on the provided data, Ethereum Classic appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast predicts further price drops. The RSI is hovering around the neutral level, suggesting neither strong buying nor selling pressure. However, the RSI is below $50, which aligns with the downtrend. The Bollinger Bands are narrowing, indicating a potential breakout in either direction. Given these factors, a bearish strategy is recommended. Enter a short position at the support level of $18.70. Set a stop-loss order at $19.20 to limit potential losses. The initial target price is $17, based on the forecast data. Monitor the RSI closely for signs of oversold conditions, which could signal a temporary bounce. If the Bollinger Bands widen and the price breaks below the lower band, consider adjusting the stop-loss and target prices accordingly. Based on the provided historical and forecast data for Polygon, the trend appears to be bearish. The price has been consistently declining over the past 2 weeks, with the forecast indicating further downward movement. The support level of $0.268 appears to be holding, but the resistance level of $0.297 is proving difficult to overcome. Considering these factors, a short position strategy could be employed. A potential entry price would be around $0.272, with a stop-loss order placed at $0.281 to limit potential losses. The target price could be set at $0.243, based on the forecast data and the overall bearish trend. This strategy utilizes the support level as a potential entry point and aims to capitalize on the anticipated price decline. Based on the provided data, AEVO appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast predicts further downward movement. The RSI indicator is hovering below $30, suggesting oversold conditions. However, the price is also approaching the support level of $0.132, indicating potential for a bounce. Therefore, a contrarian strategy could be employed. Enter a long position at the support level of $0.132. Set a stop-loss order at $0.129 to limit potential losses. Target a price of $0.145, which represents a 10% gain from the entry price. This strategy capitalizes on the potential for a short-term rebound while managing risk. Based on the provided historical and forecast data, optimism appears to be in a sideways trend with a slight downward bias. The price fluctuates between the support level of $1 and the resistance level of $1.19. The forecast price suggests a continuation of this downtrend in the coming week. Given this trend, a potential strategy could involve a short position. Enter a short position at $1.16, with a stop-loss order at $1.19 to limit potential losses. The target price could be set at $1, aiming to capitalize on the predicted downward movement. This strategy also incorporates the RSI indicator, as entering the short position when the RSI is above $40 indicates potential overbought conditions, increasing the likelihood of a price reversal. Based on the provided data, STRK appears to be in a downtrend. The price has been consistently declining over the past 2 weeks, and the forecast predicts further downward movement. The RSI indicates that the asset is oversold, suggesting a potential for a short-term rebound. However, the Bollinger Bands show that the price is trading below the middle band, reinforcing the bearish trend. Therefore, a short selling strategy is recommended. Enter a short position at $0.207, the highest forecast price. Set a stop-loss order at $0.221, the resistance level. The target price is $0.175, the lowest forecast price. This strategy capitalizes on the downtrend while managing risk with a tight stop-loss. Based on the provided data, Solana appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data projects further downward movement. The RSI, hovering below $30 for most of the period, indicates oversold conditions, suggesting potential for a short-term rebound. However, the long-term trend remains bearish. Therefore, a conservative strategy would be to wait for a price bounce towards the resistance level of $139. A buy order could be placed at $135 with a stop-loss order at $130. The target price could be set at $144, aligning with the forecast and the initial support level. This strategy leverages the potential for a short-term rebound while mitigating risk by setting a tight stop-loss. Based on the provided data, Jupiter appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below the support level of $0.689 on several occasions. The forecast data also suggests a continuation of this downward trend. RSI, with an oversold level of $20 and an overbought level of $80, indicates that the asset is currently oversold, suggesting a potential for a short-term rebound. However, the overall trend remains bearish. Therefore, a suitable strategy would be to enter a short position at the market price, with a stop-loss order placed above the recent high of $0.731. The target price could be set at the next support level, which is around 66 cents. This strategy leverages the downtrend and the oversold condition of RSI, but with a risk management plan in place to limit potential losses. Based on the provided historical and forecast data, Render appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests this trend will continue. Support is located at $3.64, providing a potential floor for the price. A buy position could be considered near this support level, with a stop loss set slightly below at $3.60. The target price could be set at $3.80, aiming to capture a potential bounce off the resistance level of $4.18. The RSI indicator is currently in oversold territory, suggesting that the price may be due for a rebound. However, the Bollinger Bands show that the price is trading near the lower band, indicating continued downward pressure. Therefore, a conservative approach is recommended, entering a position only near the support level and using a tight stop loss to mitigate risk. The target price should be set realistically, considering the overall downtrend and the potential for further decline. Based on the provided data, Solana name service appears to be in a downtrend. The historical price data shows a consistent decline, with the price breaking below the support level of $0.113. The forecast data also indicates further downward movement. Considering this trend, a bearish strategy is recommended. A suitable entry point would be around $0.116, the recent support level. The stop loss order should be placed at $0.113, just below the support level, to limit potential losses. The target price could be set at $0.0972, which is a significant support level in the forecast data. This strategy combines the bearish trend analysis with the support and resistance levels to maximize potential returns while managing risk. Based on the provided data, Doge-Coin appears to be in a downtrend. The historical prices show a consistent decline, and the forecast prices indicate further downward movement. The RSI is below $50, suggesting bearish sentiment. The Bollinger Bands are narrowing, indicating a potential for a breakout in either direction. Considering these factors, a short position could be initiated at the entry price of $0.211. The stop loss order should be placed at $0.218 to limit potential losses. The target price for this trade is 17 cents, which aligns with the historical support level and the predicted price decline. This strategy aims to capitalize on the downtrend and the oversold conditions indicated by the RSI. Based on the provided data, PEPE appears to be in a downtrend. The historical price data shows a consistent decline, with the support price hovering around $0.0000790. The forecast data suggests this downtrend will likely continue in the coming week. Therefore, a short position is recommended. A suitable entry price would be around $0.0000830, the recent high point. The stop loss order should be placed at $0.0000880, above the recent high and the upper Bollinger Band, to limit potential losses. The target price could be set at $0.0000720, aligning with the forecast and the lower Bollinger Band, aiming for a potential profit of 14%. Additionally, the RSI indicator is currently hovering around $35 to $40, indicating a neutral to slightly oversold condition. However, the downward trend and the forecast suggest further downside potential. The Bollinger Bands are also narrowing, signaling a potential breakout in either direction. Given the overall bearish sentiment and the potential for a further price decline, the short position based on the trend analysis appears to be the most suitable strategy. Based on the provided data, Shiba Inu appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below the support level of $0.0000137 in recent days. The forecast data also suggests a continuation of this downtrend, with prices predicted to fall below $0.0000137 in the coming week. Therefore, a short position strategy is recommended. Enter a short position at the market price, with a stop loss order placed at $0.0000145, slightly above the recent swing high, to limit potential losses. The target price for this trade is $0.0000125, based on the forecast data and the historical price action. This target price represents a significant downside potential in line with the overall downtrend. Based on the provided data, Dog with Hat appears to be in a downtrend. The historical price data shows a consistent decline, supported by the forecast data, which predicts further price drops. The RSI, while fluctuating, remains below $30 for most of the period, indicating oversold conditions. This suggests a potential short selling opportunity. A suitable entry price would be around $0.581, the recent support level. The stop loss should be placed above the recent high of $0.703 to minimize risk. A target price could be set at $0.449, the lowest forecast price in the coming week. The Bollinger Bands also support the bearish outlook. The price is consistently trading below the middle band, suggesting a weakening trend. Furthermore, the bands are narrowing, indicating a potential for a breakout in either direction. However, given the overall downtrend, a breakout below the lower band would confirm the bearish bias. Combining this with the RSI and price action, a short position at $0.581 with a stop loss at $0.703 and a target at $0.449 presents a potentially profitable opportunity. Based on the provided data, Doge-Coin appears to be in a downtrend. The historical price data shows a consistent decline, with the price hovering around the support level of $0.0025. The forecast data also indicates a continued downward trend for the next week. Considering the RSI, which is currently below $35, suggests the asset is oversold. Therefore, a potential entry point could be around $0.0025, the support level. A stop-loss order should be placed below the recent low of $0.00247 to limit potential losses. The target price could be set at $0.00229, the predicted low for the week. Based on the provided data, Near Protocol appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data predicting further downward movement. The RSI, while fluctuating, remains below $50, indicating bearish sentiment. The Bollinger Bands are contracting, suggesting a potential for a break in either direction, but the overall trend is still downward. Considering these factors, a bearish strategy is recommended. Enter a short position at the market price when the price breaks below the support level of $3.01. Set a stop-loss order at $3.14 to limit potential losses. The initial target price is $2.88, the lowest forecast price in the given data. Monitor the RSI for potential oversold conditions, which could signal a temporary price rebound. However, maintain a cautious approach and adjust the stop-loss or target price as needed based on market movements and technical indicators. Based on the provided historical and forecast data, Internet Computer appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests further downward movement in the coming week. The support level of $6.35 provides a potential entry point for a short position. A stop-loss order should be placed above the recent high of $6.76 to limit potential losses. The target price could be set at the next significant support level, which is around $5.50. The RSI indicator is currently hovering around $34, indicating that the asset is not oversold. However, the RSI has been trending downwards, suggesting a potential for further oversold conditions. Bollinger Bands show that the price is trading close to the lower band, indicating potential for a bounce. Given the combination of these factors, a short position with a stop-loss at $6.76 and a target at $5.50 appears to be a potentially profitable strategy. However, it's important to note that this is just one possible interpretation of the data, and other strategies may be more suitable depending on individual risk tolerance and market conditions. Based on the provided historical and forecast data, Injective appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests this trend will continue for the next week. The support price of $7.90 provides a potential floor for the price, while the resistance price of $13.90 acts as a ceiling. A buy position could be considered if the price finds support around $7.90 and shows signs of a reversal. A suitable entry price would be around $7.90, with a stop-loss order placed below the recent low at $7.50 to limit potential losses. The target price could be set at $10, representing a potential upside of 26% from the entry price. This strategy utilizes the support level and aims to capitalize on a potential rebound. The RSI and Bollinger Bands can be used to confirm the entry and exit points, looking for bullish divergence on RSI and a price breakout above the upper Bollinger Band. Based on the provided historical and forecast data, BTC appears to be in a volatile period with a potential upward trend. The support price of $318 provides a strong foundation, while the resistance price of $408 acts as a potential ceiling. The RSI indicates that the asset is not currently overbought or oversold, suggesting room for further price movement. The Bollinger Bands show a widening range, indicating increased volatility. Therefore, a long position could be considered with an entry price around $380. The stop-loss price should be set at $318 to protect against a significant downside move. The target price could be set at $408, aiming for a potential profit of approximately 28%. This strategy leverages the potential upward trend and the asset's current position within the Bollinger Bands. Based on the provided data, THETA network appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast predicts further downward movement. The support price of $1.15 remains relatively stable, suggesting a potential floor for the price. However, the resistance price of $1.26 has proven difficult to overcome. Considering these factors, a bearish strategy might be appropriate. A suitable entry point would be around $1.17, near the support level. A stop-loss order should be placed at $1.15 to limit potential losses. The target price could be set at $0.993, aligning with the forecast for the end of the one-week period. This strategy utilizes the support level as a potential entry point and the forecast price as a target, aiming to capitalize on the anticipated downtrend. Based on the provided data, WorldCoin appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further price drops. The RSI, while showing some fluctuation, generally remains below $50, indicating bearish sentiment. The Bollinger Bands also suggest a downtrend, with the price consistently trading below the moving average and the bands narrowing, indicating a potential for a breakout to the downside. Therefore, a short position strategy is recommended. Enter a short position at the market price when the price breaks below the support level of $1.06. Set a stop-loss order at $1.10 to limit potential losses. The initial target price is set at 95 cents based on the forecast data and the observed downtrend. Monitor the price action closely and adjust the stop-loss and target prices accordingly. Based on the provided data, Hooked Protocol appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price dropping from $0.221 to $0.176. The forecast data also suggests a continuation of this downtrend, with prices predicted to fall further in the coming week. Therefore, a bearish strategy is recommended. A good entry point for a short position would be around $0.185, the predicted high for the next week. The stop-loss order should be placed above the recent high at $0.198 to limit potential losses. The target price could be set at $0.153, the predicted low for the next week, aiming for a potential profit of 17%. This strategy leverages the downtrend identified in both historical and forecast data. Based on the provided data, Artificial Superintelligence Alliance appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below the support level of $0.608 multiple times. The forecast data further suggests a continuation of this downtrend, with prices predicted to fall below $0.608 in the coming week. Considering these factors, a short position strategy is recommended. Enter a short position at the market price, with a stop-loss order placed at 66 cents, the highest point in the recent forecast data, to limit potential losses. The target price for this trade is $0.532, the lowest predicted price in the forecast data. This strategy utilizes the downtrend identified in the historical and forecast data, combined with a defined risk management approach using a stop-loss order. Based on the provided data, Polkadot appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data suggesting further downward movement. The support level at $4.43 provides a potential floor, but the resistance level at $5.05 is unlikely to be breached in the near term. Given these observations, a short position strategy is recommended. Enter a short position at $4.95, with a stop-loss order placed at $4.66, the first forecast price. This stop-loss level allows for a 6% cushion against potential upward price movements. The target price for this trade is $4.27, the lowest forecast price, representing a potential profit of 14%. This strategy leverages the downtrend and utilizes support and resistance levels, as well as the forecast data, to maximize potential returns while managing risk. Based on the provided data, Filecoin appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further price drops. The RSI, while fluctuating, generally remains below $50, indicating bearish sentiment. The Bollinger Bands are narrowing, suggesting a potential for a breakout in either direction, but the overall trend points downwards. Therefore, a short position strategy is recommended. Enter a short position at the market price, with a stop-loss order placed at $3.20, slightly above the recent support level of $3.03. The target price for this trade is $2.70, aligning with the forecast data and allowing for a reasonable profit margin. This strategy leverages the perceived downtrend and utilizes technical indicators to define entry, stop-loss, and target prices. Remember to manage your risk and adjust your strategy as market conditions evolve. Based on the provided data, Conflux appears to be in a sideways trend with a slight downward bias. While the historical data shows fluctuations, the forecast suggests a potential decline in price over the next week. Considering the support price at $0.111 and the resistance price at $0.122, a short position could be initiated if the price breaks below the support level. A suitable entry price would be $0.111, with a stop-loss placed at $0.113 to limit potential losses. The target price could be set at $0.108, aligning with the forecast and allowing for a reasonable profit margin. Additionally, the RSI indicator suggests the asset is not currently oversold or overbought, further supporting a short position. However, the Bollinger Bands indicate a potential for volatility. If the price moves below the lower Bollinger Band, it could signal a stronger downward momentum and warrant a further reduction of the stop-loss price. Conversely, if the price bounces back above the middle Bollinger Band, it might be advisable to close the position or adjust the target price accordingly. Based on the provided data, Ethereum name service appears to be in a downtrend. The historical price data shows a general decline, and the forecast data predicts further price drops. The RSI indicator also supports this downtrend, with values consistently below $50 and showing a downward trajectory. Considering these factors, a short position could be considered. A suitable entry price would be around $24, with a stop-loss placed at $25.10, the resistance level. The target price could be set at $19.60, the support level. Alternatively, we can use the RSI indicator to identify potential entry points. When the RSI falls below $20, it suggests an oversold condition. We can look for a potential buy signal when the RSI bounces back above $20 after reaching oversold levels. However, given the prevailing downtrend, it's crucial to manage risk carefully. A stop-loss order should be placed below the recent swing low to limit potential losses. The target price could be set at a level that aligns with the broader trend, potentially around the $20 day moving average. Finally, the Bollinger Bands can provide additional insights. Prices tend to revert to the mean, so if the price touches the lower Bollinger Band, it could indicate a potential bounce. However, it's important to note that Bollinger Bands are lagging indicators and should be used in conjunction with other technical signals. Based on the provided data, Avalanche appears to be in a downtrend. The historical price data shows a consistent decline, with the forecast data projecting further downward movement. The support price of $20.10 has held throughout the historical period, indicating a potential floor for the price. Considering the RSI, a long position could be initiated when the RSI dips below $30, signaling an oversold condition. The entry price would be around $21.90, with a stop-loss placed at $20.10 to protect against further downside risk. The target price could be set at $24.90, aligning with a previous resistance level. This strategy leverages the potential for a bounce from oversold conditions while mitigating risk through a tight stop-loss. Based on the provided data, Doge-Coin appears to be in a downtrend. The historical prices show a consistent decline, and the forecast prices indicate further downward movement. The RSI oscillates below $50, suggesting bearish momentum. Considering these factors, a short position is recommended. A suitable entry price would be around $0.0285, the first forecast price. The stop-loss should be placed above the recent resistance level at $0.0316, ensuring a reasonable risk-reward ratio. The target price could be set at $0.0247, the fifth forecast price, which represents a potential downside of approximately 13%. The RSI strategy further supports a short position. Doge-Coin's RSI is currently below $50, indicating bearish conditions. If the RSI drops below $30, signaling an oversold condition, it could present an opportunity to enter a short position with a tighter stop-loss. However, caution is advised as the RSI can be prone to false signals. The Bollinger Bands suggest a continuation of the downtrend. Doge-Coin is trading below the middle band, and the price is approaching the lower band, indicating potential for further downward movement. This aligns with the overall bearish outlook derived from the historical and forecast price data. Based on the provided data, PENDLE appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further downward movement. The RSI indicator is below $50, suggesting bearish momentum. The Bollinger Bands are also narrowing, indicating a potential for a breakout in either direction. However, given the overall downtrend, a breakout to the downside seems more likely. Therefore, a bearish position strategy could be implemented. A potential entry price would be around $2.95, near the support level of $2.48. The stop-loss order should be placed above the recent high, around $3.05, to limit potential losses. The target price could be set at $2.48, the identified support level. This strategy aims to capitalize on the downtrend and the potential for a break below the support level. Based on the provided data, the sandbox appears to be in a downtrend. The historical price data shows a consistent decline over the past 2 weeks, with the price closing below the previous day's close for most of the period. The forecast data further reinforces this bearish outlook, predicting continued price declines for the next week. The support and resistance levels also suggest a bearish bias, with the price consistently trading below the resistance level of $0.356 and finding support around $0.307. Given this analysis, a short position could be considered. A suitable entry price would be around $0.308, the current support level. A stop-loss order could be placed at $0.316, slightly above the entry price, to limit potential losses. The target price could be set at 25 cents, based on the forecast data and the overall downtrend. This strategy utilizes both the price action and the forecast data to identify a potential trading opportunity. It is important to note that this is just one possible strategy, and other approaches may be more suitable depending on individual risk tolerance and trading style. Based on the provided data, Decentraland appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further downward movement. The support and resistance levels also indicate a bearish sentiment, with the resistance level consistently being broken. Considering these factors, a short position strategy is recommended. Enter a short position at the market price around $0.285, with a stop-loss order placed at $0.297 to limit potential losses. The target price for this trade is $0.246, based on the forecast data. This strategy utilizes the support level as the entry point and the predicted price drop as the profit target. Based on the provided data, ENG coin appears to be in a downtrend. The historical price data shows a consistent decline, with the price falling below both the $20 day and $50 day moving averages. The forecast data further supports this bearish outlook, predicting a continued decline in price over the next week. Therefore, a short position is recommended. Enter a short position at the market price when the price reaches $0.116. Set a stop-loss order at $0.125 to limit potential losses. The target price for this trade is $0.0953, based on the forecast data. This strategy utilizes the identified downtrend and the support level of $0.106 as a potential entry point. Based on the historical data and forecast, Uniswap appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests this trend will continue. The support price at $6.79 provides a potential floor for the price, while the resistance at $8.15 suggests an upper limit for upward movement. Given this trend, a short position could be considered. A suitable entry price for a short position would be around $8.02, near the resistance level. The stop-loss order should be placed at $8.15, above the resistance, to limit potential losses. The target price for this trade could be $6.79, the support level, aiming for a profit of approximately $15. This strategy utilizes the downward trend and support/resistance levels to identify a potential entry and exit point. Additionally, the RSI indicator, which is currently at $31.10, suggests the asset is oversold and could potentially bounce back, further supporting the short position. Based on the provided historical and forecast data, Chainlink appears to be in a downtrend. The price has been steadily declining over the past 2 weeks and is forecasted to continue falling in the next week. Support and resistance levels also suggest a bearish bias, with the price struggling to break above the resistance at $18.40 and consistently finding support near $14.90. Considering these factors, a short position is recommended. Enter a short position at the market price around $15.50, which is the first forecast price. Set a stop-loss order at $16 to limit potential losses. The target price for this trade is $13.50, based on the projected downtrend. This strategy leverages the downtrend and the RSI indicator, which is currently hovering around oversold levels. The stop-loss is placed slightly above the recent support level to provide a buffer. Based on the historical and forecast data, Aave appears to be in a downtrend. The price has been steadily declining over the past 2 weeks, and the forecast suggests that this trend will continue in the coming week. The support price of $192 provides a potential floor for the price, while the resistance price of $248 suggests that further upside is unlikely in the near term. Considering these factors, a short position could be initiated at the entry price of $213 with a stop-loss order placed at $218. The target price for this trade would be $192, representing a potential profit of approximately $10%. This strategy combines the downtrend analysis with the RSI indicator, as the RSI is currently in a neutral range and could potentially signal further downward momentum. Additionally, the price action is approaching the lower Bollinger Band, which could indicate a potential bounce back towards the support level. Based on the provided data, EOS appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further price drops. The RSI indicator is hovering below $50, indicating bearish sentiment. The Bollinger Bands are narrowing, suggesting a potential for a breakout in either direction. Considering these factors, a short position strategy is recommended. Enter a short position at the market price around $0.565 USD, with a stop-loss order placed at $0.58 to limit potential losses. The target price is set at $0.518 USD, based on the forecast data. This strategy aims to capitalize on the anticipated downtrend while managing risk effectively. Based on the provided data, Tron appears to be in a sideways trend with a slight upward bias. The historical price data shows fluctuations within a defined range, with support at $0.222 and resistance at $0.246. The forecast data suggests a potential continuation of this trend, with prices likely to remain within this range for the next week. A strategy based on the RSI indicator could involve going long when the RSI dips below $40, indicating oversold conditions, with a stop-loss placed below the recent swing low. The target price could be set at the upper Bollinger Band or the resistance level of $0.246. Alternatively, a short position could be considered when the RSI rises above $70, signaling overbought conditions. In this case, the stop-loss would be placed above the recent swing high, and the target price could be set at the lower Bollinger Band or the support level of $0.222. The most efficient strategy will likely be a combination of these approaches, taking advantage of both oversold and overbought conditions. Based on the provided data, Suncoin appears to be in a downtrend. The historical price data shows a consistent decline, and the forecast data predicts further downward movement. The RSI, while not deeply oversold, is hovering around $40, suggesting potential for further downside. The Bollinger Bands are narrowing, indicating a potential for a breakout in either direction. However, given the prevailing downtrend, a breakout to the downside seems more likely. Therefore, a bearish position strategy is recommended. Enter a short position at the market price near $0.0180. Set a stop-loss order at $0.0185 to limit potential losses. The initial target price is $0.0170, based on the forecast data and support levels. Monitor the RSI closely. If it drops below $30, it could signal further downward momentum and warrant a move to a more aggressive target price of $0.0165. Conversely, if the price rebounds above $0.0185, exit the position and reassess the market outlook.